All right, welcome back to Stock Market Weekly. This was another painful week for the bears. I think the stat was, so I'm going to butcher it, but it's been a few years since we've had consecutive, all four of the US major indices closing at record highs kind of consecutively altogether. So the Russell, the Dow, the S&P, the NASDAQ, all fresh all-time highs. We got that this week. A big push in momentum. There's plenty to talk about here, so let's get into it. First, our sponsor, Investors Business Daily. We've got two links in the description of this show. Get yourself a discount to their IBD 50 digital subscription and then their Market Surge charting platform. Once you're done with this video, check out those links in the description of this show. Now, front and center story here is the Fed. This meeting, I think, was probably, I don't know, I hate to use the word obvious, but it was the most sort of telegraphed expected outcome here that we've seen in quite some time. We did get the cut out of the Fed. We did get a 25 basis point cut. So the super doves out there that wanted the 50, that didn't happen. But it does seem like through the Fed's kind of rhetoric on weaker unemployment and growing concerns, we are on this path now for multiple cuts this year. And in fact, if we take a look here at the expectations for the next meeting, which is happening right around Halloween time, the end of October, you can see that the market has essentially a lock here, 92% odds that the Fed will be cutting another 25 basis points. So it seems now that the ball is kind of rolling downhill. I think the October meeting seems pretty confident by the market, at least right now. And then the December meeting, so far confident that we'll get another rate cut behind us or until we finish the year. So that will be, the market's building these expectations now. And so something we want to be on alert for and aware of. The second big story this week was Nvidia taking a stake here in Intel. This is kind of a follow-up round of funding, I guess we could call it, after the U.S. government takes their stake. So this is just quite interesting timing. But, the two companies, I suppose, now are talking about, collaboration on chips for data centers and PCs. But the semiconductor space is kind of interesting here. So Intel, of course, loved it. The stock was up about 23%. It did get faded a little bit here. You can see just a tremendous amount of volume, though, coming in on the news. And this stock is now, getting two big investors behind it. This is Nvidia, though, and this is Nvidia relative to the SMH. So this is kind of a ratio chart where we're looking at one stock's performance, Nvidia relative to its benchmark, or in this case, its sector. And you can see that Nvidia has been a little bit in the doghouse here since September. Now, again, it's we're not going to cry too much for Nvidia investors because they've profited, very nicely over the cycle, right? So, but in the short term, there's been some, noticeable underperformance here for Nvidia as a stock relative to the SMH. And, that does mean that some of the other SMH constituents are picking up the slack. If we look at performance this week, it was small caps back at the top of the list. They took 1 week off, but this is basically, I think, 5 out of 6 weeks where small cap stocks have been the outperformer, the, best performer here for the U.S. markets. Q's up 2%, SPY up 1%, Dow up 1%. It was a great week out there for risk assets. Again, you can see kind of stocks slid here into the Powell presser, into the Fed decision, and then Wednesday kind of marked the bottom and stocks rallied throughout the rest of the week. You can see volatility basically did the inverse here, spiked into Tuesday and then sold off into the end of the week. It's still sitting, in the 15 to 16 range. That is actually a little noticeable, though, because typically the lows in the VIX here is coming in closer to the low 14s, mid 14s, and the fact that we're mid 15s, hey, it's at least a little bit of kind of a normal levels as the market is at highs here. I think that's actually a little bit healthier, to be frank, with the VIX up there around 15. The dollar index was interesting this week as well. So this got a good kind of spike here right before the presser on the Fed meeting. But, we are starting to find a little bit of support. I mean, the dollar's been absolutely, crushed this cycle, this year. And so a little bit of stabilization, maybe some two-way trading kind of goes hand in hand with interest rates this week. So we basically saw the lows at the beginning of the week. And, to everyone's surprise, everyone's looking forward to the rate cuts. This is great. Rates are coming down. And of course, you get the exact opposite effect here for reaction in terms of the 10-year Treasury yield. This is a tale as old as time, right? Sometimes you can know the news ahead of time, and it doesn't necessarily guarantee the outcome that the market will trade, right? It's about positioning. It's about expectations. It's where expectations and the difference between that reality, it's that differential, that delta that really moves markets. And so for now, we did get a little bit of a bounce here. I'm not reading too much into it. It seems like the path of least resistance is lower. I wouldn't be surprised to see us knocking back on 4% in the coming weeks, but maybe we need to take a little bit of a trip higher first. In terms of sector performance, again, it was actually a more split race than you would expect, but it was market cap weighted heavy at the top of the list, driving the action. So technology and communication services, these are huge weightings in the indexes. So when they're going up, then they're going to push up that SPY and the Qs and the like. On the downside, consumer staples, real estate, as it is a little more on the rate sensitive side, and then materials, where you're underperformers. Now, in terms of our smart trend filter indicator, this is basically a measure of momentum and trend, measuring price and volume with some price action relationships. And so you can see we've got 4 good leaders up here with tech, financials, consumer discretionary, and communication services. Those are your heavyweights. I mean, when you want to see the market moving higher, these are the 4 that are really going to get the job done. And that's what's happening right now. And then you basically just have a big kind of, pack in the middle here where you've got kind of things with some two-way kind of mixed action. And then you have consumer staples and materials that are just outright on the bearish side from this trend model that we're looking at. In terms of market breadth, we did get a little bit of continuation of just, medium 150 plus stocks hitting 52-week highs. I'm actually a little surprised we didn't see more of this, particularly on Thursday, Wednesday. I know we did get a little bit of fade on the small cap trade into the end of the week. But, I would have liked to see more of a breadth thrust here underneath the hood. Right now, we've still just been kind of meandering in this mid 100 range, which, I would just like to see us kind of push up and out of that and start to thrust up. Bitcoin here has really took its time kind of consolidating this week. It did make some good progress off of these lows, and so that was nice to see. Most of our models are getting back engaged here. I do think Bitcoin and crypto are setting up for a nice kind of year-end run. Feels semi-consensus, but for now, the price action this week was mostly digestion after coming off of the lows here from the prior couple of weeks. The elephant in the room, though, to really get momentum going is going to pretty much be this 120 level. Yes, we did get above it for a couple of days, but most of the supply and I think most of the attention's around that 120. And if we can start breaking above there, then you have your, kind of blue skies above. So we're not there yet. Maybe we get another week or two of consolidation, but it seems like we're setting up here for a good, decent move here into the end of the week. In terms of economic events, we do have some Fed speakers out, and including, I believe our new Fed member is giving his speech at the beginning of the week. We also have Powell out there as well on Tuesday. And then we do have some initial jobless claims and some durable goods data that's coming out from the econ side. Now, I wanted to start to include some of our models that we're running here at the Trade Risk, just to highlight these, kind of what they're doing on a week-to-week basis, because I think it gets lost, and I think it can actually be quite helpful. So this is our long-term trading system, Galahad, right? This is kind of the all-weather anchor in our portfolio. These are the total returns since it's been trading live. So our benchmarks, the S&P 500. I won't go through this in detail every single slide, but we'll post this up here. We publish our returns every month. I'm going to try and include it in a slide like this. This is the more timely sort of chart here on the right-hand side. So this is Galahad's current exposure, and it's all the way there. I mean, it is invested right now, and it makes sense, right? With stocks at all-time highs and a predominantly sort of trend-following kind of all-weather portfolio, you would think that Galahad would be pretty invested, and it certainly is right now. So it's basically riding the waves higher here. It's having a great year. We're beating our benchmarks, and right now, less is more, and Galahad's getting the job done. This is our other model here, Lamar, and so this is a shorter term tactical model. This trades in and out, cares less about what the market's really doing, and is trying to find those fast edges. Its historical win rate, this is, I guess, over the past year, 61%. So it's, usually pretty accurate. It's going in, again, this will be the more timely slide on the right-hand side, but it's going into the weekend, pretty heavy cash and marginally net long. It did have some short exposure this week. That was not pretty. So it had some semiconductor shorts, which were not pretty post that Nvidia news. It did kind of puke some of that out. So it was a tough week for short exposure in the tech space for this model. But it finds itself now a little more balanced, a little more long. The big winner this week, though, was our Quant Rockets. So Quant Rockets here is our momentum model. And this was probably the best week for momentum that I've seen since maybe coming off the April lows. This was an absolute monster week. These returns that you're seeing are the individual stocks that are on our, active kind of buy list, our model, what we have sort of analysis on, and these are weekly returns. So these these returns you would be happy with in a single year. These were the stocks that were moving this week, and I just want to highlight the top three. So the total portfolio had a 348% move this week, which is just bonkers. This is really kind of catching lightning in the bottle if you were exposed in a lot of these different stocks. This was the biggest winner. So Rigetti. This was a buy signal that came onto the list just last week. So basically kind of coming right in here on the breakout, and just had an absolute ripper this week of 70%. So this is still an active long position, been in it for 5 days, 70%. These are, the types of wild fast moves that this model looks for. D-Wave, so this is QBTS, also with a fresh buy signal. This was this week. This was coming into the week, and so this was up 46%. And then Bloom Energy, this was our third best performer this week. This was something that hit our list 25 days ago. This was in the middle of August, and so this has been just on an absolute monster run, and so it's been pretty incredible. The performance this week was pretty remarkable. I'd say probably the bulk of the move has happened, so I'm not going to go gloat and say that this is going to, continue for another week, because it is quite extended there. I did want to leave, though, a more actionable name. And so, this is funny because this is one of the names that I took this week out of our model, but this is Coinbase, and a much more subdued return, but more actionable, right? So if you're looking at this now and you're saying, okay, Evan, looks like these stocks ran, what's the name that you like right now? Or what's the name that Quant Rockets likes? I think Coinbase is interesting. It kind of based out here for a few weeks, starting to push back up, get inside this gap. And I think it could go for a gap fill and then maybe go challenge those highs. And especially if you couple this with maybe a Bitcoin breakout into year end, or Ethereum breakout, then it looks like we could have some good cross currents on this, or some tailwinds, I guess is the better metaphor. And for this trade to continue to get some legs. So this was, kind of a little bit of a tour through the different models that we run. We run 3 different models. And so I'm going to start to highlight, not going to go with this in depth every single week, but I want to sort of just bring you some up-to-date, kind of happenings between all these models. We have a lot more information on our website, of course, and we have a $1 trial if you're interested in checking any of these out. We're going to go to TC2000 now. We're going to look briefly at a couple of charts, and then we'll call it a weekend. All right, so we've got TC2000 open. We're going to go through quick here because I don't think there's a whole lot more to say when you kind of understand the lay of the land, where we are in the trend cycle coming into year end. We're extended in different pockets of the market for sure. The momentum factor, I guess, saw a big surge this week, right? So there are some things that are overheated, but structurally, this market is still just hanging in there. This will not last forever, but it is persisting for now. So when I look here at the S&P 500, look, we had going into the Fed this little 2-day kind of move. That's all we're getting nowadays. Like, this is it. That's the reset. That's the extent of pullbacks, right? Again, this will change, but for now, the environment that we're in, until we see more of a landmine catalyst kind of hit this market, these multi-day shakeouts are about as, is the extent of the downdrafts that we've been seeing. And this has been happening basically all year long since the April lows. So S&P 500, new all-time closing highs. I think it still looks pretty good. Yes, we can wiggle. Yes, we can pull back, but generally speaking here, seems like support is still coming in for this market. NASDAQ 100 pushing to highs here as well, up 3 weeks in a row. Bit extended, right? A little bit of froth here, but still it's working. And then of course the Russell 2000, this is the star of the show because this finally made new closing all-time highs going all the way back to 2021. And now we can see, again, a little bit of a pullback here into the end of the week on Friday. Maybe it needs to, check back for a couple of days or go sideways. But generally speaking, got some good trend and momentum behind the back here. I've been a broken record about gold. Gold continues to work. This week it was up 1.12%, made new weekly closing highs. I've said it, multiple times. Gold continues to be either my largest position or my second largest position this year. Pretty much rotating between those two spots. It's up 40% this year. As a hint, this is a core allocation of our Galahad trading system. And so it's just been a great performer here. Silver also huge performer this week, or I shouldn't say huge performer this week, huge performer over the past few weeks. This week it was up 2% though. And again, you can see kind of stretching, not quite to all-time highs, but pretty darn close and some good volume coming in. Gold miners, right? We highlighted this quite a bit back in here. I did have a position. I sold them way too early, right? And the reason I sold them was, I had so much gold on that I just didn't need all this extra exposure. But I'm pretty sure, I don't remember exactly where I got out of this position, but it's long far ago. So gold miners up 5% just on Friday, and is up about 4% on the week. KWeb, another good spot here. So international's been working, weak dollar, KWeb, ACWX, China, right? Things are working out there. We already talked about Bitcoin. Again, kind of just hanging out here. I'll look at the IBIT, kind of had a pretty, dull, poor performing Friday. Maybe it was quadruple witching related. Maybe taking off some risk off the weekend. Doesn't really matter. I think the structure here, though, as long as IBIT stays over 64 or so, I think looks pretty good. Again, I think setting up for a good move into year end. And again, I think you can look at some of these other stocks and these proxy plays for Bitcoin. MSTR, I posted this chart. I thought we could get one more puke here as this was consolidating sideways. I was watching this and it felt like, we could just see one kind of push down and get us closer to this 300 level before we found a bottom. After Thursday's action, maybe that was it. Maybe this is the bottom here. I think this will be important to watch, actually, particularly, on the Bitcoin trade as a whole, too. You really want to see MSTR kind of finding a floor and participating. It's such a big kind of conglomerate in the ecosystem. And then just the way kind of things flow, you do want to find this, starting to catch a bid here. So pay attention to this. As long as it's holding over 325, 330, then I think things can look pretty good. I talked about coin earlier. I do have a position here in coin. Again, I think, it could come in here and fill the gap and then, push back up towards highs. It's working for now. And I think that's it. It's pretty much everything I wanted to cover. Talked about Tesla last time. Tesla's great. Again, I have a position here. This is a Quant Rockets pick as well. We highlighted Tesla last week, and then Elon came in with the $1 billion open market buy. And, again, this looks like it wants to kind of float up as well here. So life is good, right? This is the good times in markets. They don't happen often where everything's kind of stacking up and lining up and working. But hopefully you've been able to participate. We've got links in the description of the show. We've got these rules-based systems that are designed to go out there and be simple daily workflows that all excel in different types of market environments. So check them out if you need some more structure. And that's what I got. So thanks as always for tuning in. I hope to see you back here next week. Take care. Have a great weekend.